recording. I don't have the page. But anyway, here we are. Good morning, everybody. Welcome back to the RationalInvestor.com's Daily Brief. Somebody can just keep an eye on the YouTube page. I don't happen to have the link up here in front of me, so let's see which chat box it is. One of these chat boxes. One of these boxes is not like the other. Nope, I've lost it. Anyway, so good morning, everybody. Kind of flying a little blind here, so I'm not quite sure. I hope you guys are keeping an eye on YouTube pages and making sure all that's flying along. But happy Friday, TGIF. Here we are back in the saddle, coming in on the, where are we here? It's the 8th of March. Wow, time is just marching on by. No pun intended. Good morning. I see we have a lot of our OGers. Hey, Dane, nice to see you, buddy. We're putting an official vote to how we're going to budget TRI's expenses here into the this summer Vancouver meetup. So it's entirely, the decision is up to management. We're going to put a vote to it. I would like to go and spend a bunch of money, but it's not really fair to the boys without giving them their fair shake. So on Monday, we plan to have the official vote on what our budget is for this upcoming Vancouver meetup. So I just wanted to mention that, Dane. I know you went and found us some places to take a look at. We should have a formal answer for you by Monday. You know, it is the end of the week, and actually we did a really cool presentation of options expiry information yesterday. It was fascinating to watch the options boys moving around and squaring positions all through yesterday. And interesting to see that I think actually they were writing a lot of options yesterday. So, you know, it'll be interesting to take a look at that kind of data as well. I did pull down the NASDAQ data as well, and I noticed there's about $1.5 billion on the line if the NASDAQ market makers can make sure that the NASDAQ close above 170 on the QQQs. So probably interesting just to go take a boo with that. I did put on a little probe trade last night, just sort of feeling Bitcoin's top, you know, like 5 contracts on OKX, so really nothing too meaningful. And that got stopped out, so don't think we're at a top just yet, but of course we're heading into the weekend, so it's interesting how we still keep flirting with this this ceiling here. So probably not a bad idea. We take a look at
Brian, you're not sharing anything, right? So you're just showing the
I'm sorry. I'm just blabbing away here. Actually, what I'm trying to do is get to the introduction of you guys. So maybe I'll shut up right now and just simply say, as you heard just a moment ago, we do have the mayor of Vienna driving the bus and saying, Brian, you know, what the frick are you doing over there? So how are you doing this morning, Alex?
Hey, sir. I'm pretty good. How are you?
Good, good. We also have Thomas here in the house this morning. Can't wait to hear the Bear report. How you doing this morning, sir?
I'm calling in fat.
Calling in fat. All right, that's our new tagline on the site. I don't know whether you guys actually Thomas shared that what was it called, Market Huddle or something like that, podcast with me the other day, and I liked it so much that I shared it with the community yesterday, and that was a line from that Market Huddle video. There were lots of cool little soundbite one-liners in that video, so you'll probably hear Thomas and I saying a few references to that. But it sounds like you're in good spirits. How are you doing this morning?
I am ready to tackle this upcoming fiasco that's brewing here in the stock market.
Okay, well, that sounds like fun. I suppose without further ado, why don't we jump into that? Again, I don't have the YouTube page open, so I'm not quite sure what we're looking at. I have clicked on your screen.
Yeah, we'll be good. I'll make sure.
And credited with calling the 2008 crisis as the next 20 years in the stock market will break a lot of hearts. That sounds like fun.
Yeah, who cares what he says? Anyone that's on these talking head shows is just like they are, I don't, whatever. Anyway, stock market opened up down.
You know, yeah, the boys in that Market Huddle broadcast were talking about it too, like this Japanification. Have you heard that term being kicked around?
Yeah, evidently Jamie didn't think he was subjected to that, but he admitted that he eats sushi, so I think he realized
Uh, so, Japan basically had like 2 decades, what they call the lost decades, and just going through quantitative easing after quantitative easing, trying to get through the demographic nightmare of their situation. I don't think we're in nearly as bad a demographic situation. If you look at Japan, their demographics are just a nightmare. But here in North America and in Europe, well, I don't know so much about Europe, but North America, we've actually diluted the demographic situation. So I don't know whether it necessarily plays out exactly the same, but I can see a lot of similarities. And the sad part about it is, the people that were doing the level 2 program, they just went through GAN. And Mr. Gann is a big fan of like the 90-year cycles, and we're coming up on the 90-year anniversary of the 1929 crash. So could we have a Great Depression here over the next 10, 20 years kind of idea play itself out? It's perfectly logical. But yeah, I suppose we have that looking in front of us. But what's on your mind this morning? What are you looking at?
So a couple things have caught my eye and my ears. The first is this jobs report, and it's saying that it wasn't as bad as the 20,000 that this thing came out and said that, only 20,000 jobs were added, but they're saying this is better than it seems. I don't believe it. I think this is someone trying to put a positive spin on a market that looks like it's about to tumble downward. But I also don't believe that this is really what the market's paying attention to. I think what the market's really paying attention to is what happened out of China overnight. And this is really funny. So there was a release from one of the wires that said China exports rise 16.6%. But I think, oh no, so this was Zero Hedge. So they tweeted out that they rise 16.6%, but they meant that they actually declined 16.6%, which is a lot, right? That's a huge decline in exports from China, and their market tumbled. You can see the China A50 is down really big after a tag Mountain Man here. This is all in the face of this credit injection that came out last week and the week before, that China's going to pump up their market. And then all that just in the face of, well, turns out shit's not as good as we thought it is. And that's not enough to keep the market propped up. So the fact that China's falling off on its exportation, that to me and to, I think, the market means that we're slowing, and the markets are taking a dive here in the face of that. So you've got bad news out of China. And then now in the US, you've got Elizabeth Warren calling that, oh, we need to break up big tech. So that includes the FANG stocks. And those stocks took a big tumble here as well. Amazon crashed. They're showing this 1-minute chart after she came out and said that this is going to be a bipartisan issue. She agrees with Trump, and we need to start breaking up these guys. And this was really interesting because that actually went along with this week's podcast from Macro Voices, where they talk about this sort of crony capitalism and why the new generation is really obsessed with this sort of like not communism. It's this sort of rise in populism where you want to, what's it called when you share a bunch of stuff? It's not communism. It's this whole, we're going to share everything, and that companies shouldn't be given these sort of tax exemptions, for instance, corporate jets or a tax write-off. And you've got Alexandria Ocasio-Cortez coming out and saying that all this stuff that's in favor of these big corporations just really isn't good, and we need to get rid of that stuff. Yeah, socialism. Thank you, Josh. Socialism is on the rise because of this, and they would really need to level the playing field, because the new generation that's coming up, they look at this and they're like, well, this shit's not fair. Why should this continue to go on? And it's this, he dubbed it, the guest on that show dubbed it crony capitalism. And I think that's why this, rise in populism and rise in support of socialism is coming up. And it's a problem. And I mean, we know that socialism doesn't work. We've seen it in action in the past. And, it's just everyone shifting from thing to thing, trying to just, rebalance the scales. But eventually, they become unbalanced. And this is a constant sort of flow back and forth. And it's unfortunate, but no one really has a good solution for it other than this continued modern monetary theory idea, and that we're just going to keep pumping more and more money into the banks and into the system to keep it from collapsing. And that's the only solution that people have right now. Yeah, Dane says Denmark seems to be doing okay. They're a nice bubble exception to all this, but nonetheless, I mean, you can look at see what's going on technically speaking here in the stock market, and it's just not good. And one of the fascinating things that happened was they had this guy Charlie McElligott, and you've heard me talk about the CTA programs, which are the algorithmic trading programs that come online, or they'll buy the market or sell the market at certain levels. And he says what he's seeing out of these systems, and also what he's seeing in the options market, is that this week's options expiration isn't actually the big deal. It's next week's options expiration, because that's the quarterly expiry. He said he's seen funds piling in on the long side for the last couple of months, buying calls, and then recently they're reducing their exposure, and they were actually going short over the last week and a half. And this is sort of like their way of getting out of their positions and also preparing for what may be coming in the next month or so. But nonetheless, the point was that they see that anything below, I think on the S&P, the number that he gave out was 2724. And anything below that, and look at that, we stopped right at 2726. Anything below 2724 would trigger massive selling by the algos and trip up a bunch of the other markets to start selling off as well. So that's a key number to watch. And he was asked, what do we do next week? Like, this is a dynamic program that shifts depending on how liquidity is looking, what's going on in the options market. It's a very dynamic model that takes a lot of variables. And he said it's just going to continue to shift lower. So basically, what I think I got from this is we need to take that level within the next week or so. Otherwise, it's going to continue to drip lower and lower, and sort of that big flush downward may not happen. And that's probably a good thing. And it's probably a good thing if we hit that number too. Just get it over with, rip the Band-Aid off, and probably bring us down to 38.2. And then we can figure out, what does the market want to do here? Now, I'm of the camp that I believe that the market does need to sell off a bit, come way too far, way too quickly in just one quarter. And I think a correction would be healthy. And I think it's a buy on dip opportunity personally. I think anything, in these areas, and 2,500 to 2,600, I'd be looking to accumulate positions going into May. And I think, and it's interesting because I keep telling Brian that he's so much like these guys, and they seem to be so much like him. And he goes, one of the hosts was like, so is this sort of like a sell in May and walk away opportunity? I was like, what? Who is this guy?
They just keep coming out, right? And Goldman Sachs said, buy the market. Well, we all know what to do.
Yeah.
The amount of, I just to sort of add to Thomas's conversation here, I was a bit surprised looking at the NASDAQ here today. People were throwing around on the site that there were some potential key reversals and things like the S&Ps and stuff. I didn't necessarily see them in ES and SPY, but I really do see it quite pronounced in NASDAQ and the tech stocks. And how ironic, right? The socialists are now going to start talking about breaking up the big monopolies and stuff and oligopolies in the tech space. But one thing actually that did sort of jump out at me, I don't know whether we remember. I mean, before I leave this, I thought it was really interesting. I pulled, we were looking at the S&P 500 options yesterday, and then I noticed that today's data, they were extremely busy. You can see like 275s and stuff like that. They were pretty low numbers. But if you actually look at today's data, the numbers just spiked dramatically. So we don't have that. So here is today's update on those options numbers. And you can see there's the 273s. You can even see yesterday, 273s. That's like down here. There were only 18,000 contracts written yesterday. And then we loaded up today, and you can see, holy crap, 273s. Now there's 60,000 options. And I mean, we're starting to talk about some serious money here. Who wants to do the math? Just sort of 60,000 times 100. So that's basically 6 million shares times $273 a share. I mean, that's a lot of money. And then I also noticed, so it's interesting, our commentary about the options pin yesterday. It's really interesting to see just in one day how they can shift their entire book down, right? So you can see the heaviest open interest 274s and 273s here today. And now these open interests aren't even really looking that significant anymore. So I think that the derivatives boys were extremely active in the market yesterday. Obviously, they saw something that they didn't like. I guess maybe they might have even caught wind of that employment number ahead of time. But you can see where they're trying to establish a floor now on these, because I guess they fully expect to get exercised on all these bad boys. But one thing that sort of jumped out at me, which I was a bit surprised about, and really it kind of makes sense when we look at that NASDAQ chart, this is going to, and this is such a fascinating anecdote, right? Because what does the top in a market look like? Very rarely do we get to see weekly engulfing bars, and we had an absolutely beautiful one that actually marked the top in the NASDAQ. And I find it incredibly fascinating that we're actually going to get two weekly bearish engulfing bar key reversal bars here if we close below 170.71 here today. This, you just don't, I mean, guys, I've been at this game like 20, 30 years. You don't see this every day. And to see this, and the irony of it all is that the engulfing bar is happening exactly where it's supposed to happen. I mean, this is the definition of a bear if I've ever seen one. And then sort of the final note to that I wanted to add was, this was our first 2-week study where the fund managers thought that money was flowing, REITs, financial services, discretionary, and then this comm services. I'm still not entirely sure who goes into that. Technology was supposed to underperform. And the irony of it all is, where is that image now? Oh, don't tell me I lost it. Anyway, if you actually pull up the, maybe I have it over here. If you pull up the study as of sort of currently, and I guess I don't, but I'll reload it here. That's funny. I thought I had it up here. Give me a second. Well, I'll show you how I do this, just anybody wants to see. So we'll just grab a stockcharts.com link. And we will go to their homepage, and then we'll go to the performance charts, and we will go S&P sectors. So there they are, and then we'll zoom this into the beginning of the year. So that is right there, January 3rd. So this is the quarter so far. And what's fascinating is the industrials and the technology are dramatically outperforming. But given our first 2-week study, this is where the fund managers were, this is what they were expecting. So it's fascinating to see how, tech, they were actually expecting it to underperform. Then we go look at the NASDAQ, tech-heavy NASDAQ, and holy crap. And I don't know, are we sharing the right screen here on YouTube? If I've screwed this up, I'm sorry, guys.
Sure.
But, we've got basically another 3 weeks to go. And, of course, the third Friday of the month, as Thomas said, and that's a very good point, is the big monthly expiry. So we should probably be looking at that data as well. And I would imagine the open interest is just staggering. So, maybe after today's daily brief, thank you for reminding me, Thomas, I'll take a look at that. But it's just interesting how, the first 2-week study suggested tech was going to underperform. So maybe this market's rallied a little bit too far. And gee whiz, here comes a big fat key reversal. And then, the final piece to that, I think, is if we pop on over and look at things like the SOX index, and, this is sort of big technology proxy. And my guinea pig is here. Colleen, do we see any letters of the alphabet up here that maybe we should be paying attention to? So, and what a coincidence, that just so happens to come in right in reload zones and right up against primary trend line. So, I wouldn't be surprised to see some dramatic underperformance out of tech here going forwards. And really, gee whiz, actually, I missed a pretty damn good trade there on the Sox. Probably should have been a little bit more active there. Hindsight 2020, of course. But geez, what an AM location. And the final piece to this is: do you have any signs of divergence? And holy crap, Willie stupid, and just the most beautiful divergence there.
Oh, son of a bitch! It's double X. That's why it was so expensive. I was pricing out just the SOX. I didn't realize the SO double X was cheaper.
Okay. All right. So anyway, the point of the matter here is, I'm a little surprised to see the market has done as well as it has, and then sort of when we look at the options expiry information, and the one that I really wanted to show you was this one. This is the NASDAQ as we stand right now. So the question ultimately is, why is the market trying to find a floor where it is right now? And there's that 170 put on the QQQs. Look at the open interest there, 87,000 contracts. I mean, who wants to do the math here? You can see that, I don't know what the average right price was, but you can see that the option's trading at a good buck or two. But who wants to do the math? 87,000 times 100 times 170. How much does that come out to? Just this one level here literally represents $1.5 billion. So is there any incentive for the NASDAQ and the tech boys and the market makers to try somehow to keep the market above 170 here into expiry? I think there is. It'll be really interesting to see what next week's data is, but it should sort of make sense. And it's interesting right now. You can see market, we're still probably a good 4 or 5 hours away from crunch time. But let's keep an eye on this 170 level. You can see we're 169.91. If we close the week out below 170.71, then that key reversal level is in. If they close the market below 170 even, then that means Wall Street is going to be long a lot of stock, and they're going to be motivated to get that stock off the books. So really, really powerful level coming in here. Frankly speaking, I would be willing to bet dollars to donuts that they won't let this thing close out below 170. And you can see we're sitting 169.95 right now. So pretty big level here. So, and also too, kind of like with Thomas's comments there just a moment ago, I wouldn't be surprised if Wall Street actually, and the hedge funds and all that, they would prefer to be unloading and getting rid of positions up in here. And, the first 2 week study, you can see, you don't see, I mean, this is what's so incredible about this information, people. You just don't see this kind of stuff on weekly price charts every day, key reversals. Look at this gap. I mean, there's no way that they can leave this gap open. I mean, it just can't be left open. So, you can see that's down to 152. There's literally about $20 or about a 15% correction that could easily happen here over the next month. And of course, the final piece to all that, beware the Ides of March. Did anybody look into the flash crash? And actually, there's a really cool video that was put out on YouTube. I'll see if I can find it later, where the market barker is barking as the market's crashing there. And it happened, I think it was 2011, but I can't remember exactly, where basically in the middle of March, the market just broke like 10% in like one day. So don't be surprised. Was it the 6th of May? Was it that long ago? Okay. Anyway, all right. Sorry for that derailment there for you, sir, but there was a bunch of stuff that I wanted to bark about there in the stock market.
No problem. Should we jump through some? Well, I've been in this VIX call for a couple weeks now, and it's finally perking up. And look how polite they put in this double bottom here. I mean, you don't usually get that opportunity in the VIX very often. And you've probably, if you've been listening to me for the last, year and change, I've been getting I haven't gotten entries on the VIX in a long time. They just keep V bottoming and V topping, and I just keep missing every opportunity. And they finally put this thing in, and I'm finally making a profit on this. So it only took a year, but I think this thing's just getting started. I mean, look at how this just nice W. And I mean, look at your.
So now a guy like me, I could start drawing reload zones. Can you go down to like a 4-hour on that, or do they stop it at like daily charts? I know some of these they don't give you. There you go. So we could draw like reload zones here, and if you did want to join Thomas, yeah, it looks like a gap right down there at about 14.5 on any. Maybe Mr. Trump comes out and says, "Oh, the Chinese and I have made peace," and you get a nice little counter trend rally in the market, and volatility comes out. Now I could start really taking a look at that trade in earnest.
Yeah, but keep in mind, I'm playing calls, and if anything, I'm playing derivatives of a derivative. So this is like super advanced, super dangerous.
Yeah, new people to this site, probably best just to leave this alone.
Yeah, don't jump in on this. If you haven't been playing this, don't do it. I've been watching this thing for a year and a half, and even though I bought myself 6 months worth of time, which expire in July. I mean, this thing could go to $22, and my puts or my calls may not even end up, going that far into the money. This thing does not perform the way most other derivatives do, and it's an oddball. So, I mean, if you want to mess around and jump in here, don't put much money.
You remember about a month or so ago, I was posting how the CBOE fined a firm $1.5 million for manipulating stock prices to manipulate this VIX index.
Yeah.
So be forewarned here. There's tons and tons of manipulation around this thing.
Yeah.
But at the same time, too, I think there's really good sort of just basic market information. And, as in our level 1 program, we just simply want to introduce this to you as a contrarian indicator. And I don't know, maybe can you throw on a line chart on your chart right there? And Colleen, you know what's coming next. And you see any letters of the alphabet there that, you don't necessarily have to play this thing or trade it, but just be cognizant of the information that this thing's trying to tell us. Colleen, can you see the W? I swear, and I'm gonna miss having you in the level 1 program because I like picking on one person at a time each term. So, yep. I mean, great information. And long and short of it here is, I think we at TRI, and our community, I think we've telegraphed this market top here fairly well, haven't we?
I think you did. Yeah, you've been on top of this one.
Well, all of us. I mean, I think the long and short of it is, as we were rallying into these reload zones, and we were talking about things like, I never did get my market structure set up to short the S&Ps, but we talked lots about this: wait for location, wait for divs, wait for structure. Ironically enough, I think when I look at my price charts, I think the trade was actually off of the Dow. So, because if you look at the Dow, it put in the most prettiest M up top here.
Well, remember, the Russell gave the signal before everything else, and that was actually a really nice top.
Yeah, and I wasn't hip enough to have that up on to have the ETF and all that shit going ahead of time. But you're absolutely right. Where the hell's that damn chart? The Russell 2000, and like I said, the SOX index, it put in a really pretty top. But that Russell 2000, yeah, that was just an absolutely textbook failure. So, yeah, here's the Russell 2000. Actually, it's good that you mentioned that, so we should just probably mention this. I mean, you can't get a prettier Colleen, back on cue. Can you see the M that came in up here? Anyway, you just can't get a prettier trade setup right in location. And I don't know. Oh my goodness, can you see the divergence here? And Willie stupid. I mean, it's almost cliche, eh?
Mm.
And just for the record, FYI, whatever, had you taken this trade, and this is sort of 1+1 = 3. This is where we talk about Grim sort of suggested a while ago. Well, what happens if we apply the bot trade metrics to all of our trade ideas, the sort of trade management rules? It's interesting how the double top came in here. The bot's entry is down here. So, this would be example of sort of front running the bot. But the bots basically had the move stop to break even level hit now on the trade. So if the market does rally back to the 25 level, I think you actually have to book that small profit and just walk away. I don't really see any reason for anything to be done right now. And worst case scenario is you probably just walk away, just at a very small profit if there is some sort of insane counter trend rally. But I don't see any reason why this 50% level can't be hit. Seems perfectly logical. So, all right. Sorry for that interruption, but I just did want to mention that Russell 2000 trade.
Yeah,
it's really good trade idea.
Broadcasting the market was going to dump, and interestingly, this there was a commentary about the algorithmic trading programs picked up the Russell dumping on Tuesday and Wednesday before the rest of the market, and that triggered them to sell and get short. That was the signal that they were using.
Well, I think we've been talking about this, and again, this is where us collectively as a group, we are extremely powerful thinkers. So Jamie, through his wonderful work, highlighted this very classic relationship between Russell 2000 and blue chip stocks and how they behave. And you're right. I would imagine a lot of professional trading desks saw this and went, "Oh shit." Just short everything, just get out.
Oh no.
Yeah. And this is just such an awesome testament to our group, because we're actually seeing the market ahead of the curve. That's really good. This is why I said, like those market huddle, I think those guys are great. I think we could actually do an even better job.
TRI hedge fund, we'll talk about it at the meetup. How's that?
Damn straight, dude. Can I get a job?
Oh, that's my broker. What do you mean you're taking your business away from me?
What's the call? Thomas, what are we supposed to do?
That would be one hell of a trip.
All right. So, really good example of a nice polite M on your screen here. I don't see any reason why this thing can't dip and fill in the gap there. Seems perfectly logical.
Yeah, Snapchat I fired up. I think I talked about this on Wednesday. I bought puts on this thing, the $9 puts, and I don't know what I paid for them, but they're not in the money, but they're profitable right now. And this thing is actually giving you a reason to get back in on the short side. So it's kind of checking this breakdown, retesting this EMA here. I think there's a good reason to go on. I may even add to my position because I didn't go that aggressive on this thing, but I don't know.
I think we're showing Brian's screen right now. Can you?
I showed Thomas's, but I also see the heads at the bottom of the screen. So, do we have Thomas presenting to everybody? Thank you, Grim, for the heads up. But I do see Thomas's snap picture there.
All right, cool. Might just be me.
Yeah, Alex says, sorry, problems with my PC. It's okay, dude. You're trying your best. That's all that matters.
Yeah, I mean, it's pretty easy to see. This is a market structure top. We're retesting the neckline breakdown. We've got a...
Tommy's like, can I talk about the trade, damn it?
Yeah, shut up. Let me talk about my position, God damn it.
Yeah, in fact, if you go down to like a 4-hour, right, you could probably draw a reload zone off of this recent range, and you can see where it's probably logical if you wanted to join the trade, where you might be hunting. And again, this might be like a good example of maybe like Monday, Tuesday morning kind of idea, counter trend rallies after the dust settles. And I guess, this might even be like a Ray barbecue kind of setup here, eh? So if we can't get above 38.2, then that means Ray's rejected this move. And notice that that's basically right off of the M top there. So probably pretty big battle on this thing at about 965. If it can jump up above there, then there's a cute little gap there up at about 10 and change. So, and maybe even if you draw a trend line off of those peaks, you probably see a nice little resistance level.
Yeah, that's a cute idea. Let's see what that looks like.
Excellent, Colleen. Good to hear. And usually, one of the reasons why we do the education program at the pace that we do is, when you first came on the site, Colleen, if we were talking like this, would you have any idea what the hell we were saying? So if anything, we want that level 1 course to go really slowly, eat your vegetables for a little while, watch about like months of daily briefs to really, get the feel for how we act and stuff. And what should end up happening is as you're coming into the tail end of that level 1 program, light bulbs should start going off. Oh, now I see what he's talking about. Oh, now I get it. Oh, okay. All right. This is making sense.
Yeah. Once you start walking around town and you start seeing lines that resemble M's and W's, then you know
you start to see the matrix code as it's sort of trickling down all around you. You're in deep.
Yeah. Like I remember I was looking at some EKGs and I saw some M's and W's in that. I was like, uh-oh. All right.
My apologies for constantly interrupting you, sir. You're doing a great job. Please continue.
Thank you. So yeah, this is the trade. If you want to play it, you've got your reasons. You've got, all this nonsense here. Well, not nonsense. You have your technical reasons for it. I think that if you're not level 3, it's going to be hard for you to short this properly. The other issue is that buying yourself 6 months of time on this, I think, is overly expensive. So I'm sort of cheating and using another strategy as far as trying to get a double before my theta decay starts to crush me. But I think that based on what the market is doing, I'm going to be able to fire off that double. So I would not do this strategy in the face of a market that's kind of like ripping higher. That would be way too dangerous. But in a market that looks like it's coming down quite quickly into sort of quarterly options expiration where things are looking weak, I can fire off a W within a couple weeks a double within a couple weeks, and I don't have to buy myself that much time just because of the way the market is. And this is totally crazy, right? You don't want to do this if you're new to level 3. I've been trading options for 3-4 years now, and I'm just using a different variation, kind of cheating on Brian's program. So sorry, man, but I'm having fun with it.
The TRISOF is, and think of it like Nanny Nibbles. I try to distill stuff down to sort of the absolute, kind of like idiot proof trading strategies. And no doubt about it, we can definitely look at shorter dated options. It's just you have to understand there's, and you just slipped in there, theta decay. That's something that most people in the public haven't got a clue when you say something like that. They wouldn't. Colleen, do you know what theta decay is? Right? Probably not a good idea for new people to even consider that kind of stuff. But, you put the time and effort in, and you really get to understand how derivatives work and their subtleties, and you learn things like the Greeks, then yeah, this stuff does start to make more sense. And you can consider shorter dated options. But I always like to start off with, okay, I'm an idiot. I don't know anything. I'm in grade school. Can I just learn a really simple strategy that generally keeps me out of trouble? Because keep in mind, remember, guys, most people lose money at this game. Right? Like 95% people that come into trading, they actually end up blowing up their accounts within like 90 days. I mean, the statistics are startling. So we got to sort of start from the absolute, don't blow yourself up, right? Nanny Nibbles, look for W's, keep it simple, right? And TRISOF is all about let's just try to distill it down to the most simplest strategy possible. So sorry for the side rant there. I see you're taking a look at pot stocks.
Yeah, let me just run through a couple things quickly. So this is Tilray, and a couple people were pretty jazzed about this thing when it took off. There was a gap fill somewhere. I think this was we were looking for a gap fill here, and I was pretty jazzed about it coming back down. And then the insiders came out, and we saw that they were selling their stock as this thing was coming down. And that would include the CEO and the chief investment or whoever the hell it was. But they were selling as this thing was coming down. I'm like, I don't want to buy this thing if they don't want to hold on to it. I have no business doing that. And, it was a crazy idea because it was a gap fill. There was a technical play, and you did get a rally off that level, about $17. But that was the high. That was it. And now we're making new lows. Now, zoomed out, I also didn't like this, right? If you imagine this was an altcoin and you were going through crypto winter, most of these altcoins came all the way back down into this area, maybe 20, $30. Can we go all the way there? I don't know. But if it's an altcoin, it's certainly possible. So I just wanted to mention that because there's also issues right now with the FDA. The lead guy there evidently left, and the candidates to replace him may not be so pro-marijuana. And what does that mean for CBD and hemp and all the progress that's been made in that industry? So this is on hold for now, and I think because this industry enjoyed such a sharp rise in stock value that investors are a little less shall we say, enthusiastic to hold their money in this when, the whole thing is basically up in the air because federal regulation still isn't there yet. Although I did read that there was a bill introduced into the House to remove it from the Controlled Substances Act. I doubt that'll make any traction. But nonetheless,
I'm sure Mr. Trump will be more than happy to veto that.
Oh, yeah, definitely. So
he's not really a big fan of pot, is he?
He should probably smoke some. But
I find it fascinating how the sentiment about a month or so ago was just every bloody day. Pot stocks, oh, it's the next millionaires. Pot stocks, pot stocks, pot stocks. So that in itself should have been a bit of a warning sign to us.
Yeah, flavor of the month.
Like on that market rally. And, probably, if you have your journals out, you should be writing this down. On any kind of market rally, there's always going to be sort of a sweet spot of the market where, it's sort of like the love affair. And I just felt like this rally, pot stocks were sort of the darlings. And unfortunately, of course, as we've talked about at length, the broader market's rolling over here, risk off, US dollars rallying, blah, blah, blah. Where, the fluffy part of the market can come off really, really quickly. That's what I think you're sort of seeing here.
Yeah.
I'm also noticing, too, the palladium. That was a little bit of a fluffy part of the market through the metals rally there. Gold, silver calmed down. And the palladium stocks have all come right back down to earth. So really good sort of, dual examples of try and, on any kind of market rally, try and identify where the fluffy part of the market is. And if that rally stalls and the euphoria comes out of the market, the fluffy part of the market can get whacked really quickly and really easily.
Yeah, healthcare seems to be taking off a little bit here. This is one example of a name that I was advertising in the lounge just for fun that I was nibbling at 85 cents. And
there you go, dude. I didn't know that. Geez, I would have bought some.
Yeah, Kevin, we were joking in the lounge. Kevin had a bid at like 90 cents and it didn't come back down and fill him, but this thing's taken off here.
And some of these pharma stocks, I mean, Zach, holy shit. Zach, I mean, the cool part about it is Zach just goes through his list and he doesn't know it was biotech or, a drone stock or whatever. I mean, he's just going through his screens. And like the past few meetings are like 80-90% biotech and pharma stocks. And some of these stocks are just going absolutely crazy here. So hats off to Zach. Zach's going to do very, very well. All he's got to do is just stay focused and just keep doing the same things that he's doing. I wanted to show you one of his stocks, this alt. I mean, look at this. And look at, oh man, I was posting in the lounge, and I think I talked about this yesterday. How many opportunities? This is like your stock, dude. How many opportunities are we supposed to be given before the market says, you know, if you're not going to get in, fuck you, I'm out of here. I mean, look at this damn thing. You know, that's well over a double now off of these levels. So it's just like your little pharma name. These pharma stocks are just flying.
Yeah, I'm wondering if there's kind of a move into, is there a sector just for pharma, not just for healthcare? No, not on this rotation.
Well, it should really sort of be all clumped together. And then, of course, you know, keep them, you know, like, what do you got there? You got 6 days. If you could just do the whole quarter, you know, we might see, well, the green arrows were all the damn buy levels, Evan. You had a double bottom buy signal there. You had another double bottom buy signal there. You had a reload zone. You could even say, kind of like what we were showing on that Snapchat, right? You could say, okay, fine, you know, I'm going to let the W's come in, and then I'm going to hunt reload zones. And look at that reload zone. I mean, that's, I don't know whether I'm showing the right screen there for you, Evan. But look at that reload zone trade. I mean, that's just ridiculous. And then another W come in. So all the arrows were, get off your fucking ass, Brian, and place a goddamn trade.
Place your bets. Brian's like, no, I'll have another drink, please.
So drive you crazy.
That's all right. Some guys like to sit at the video poker machine and just get the free drinks. I get it.
Well, you know what's so funny, and somebody made, I think Colleen made reference to this. You know, I've been playing the market so long. I remember one time I had a flight down to LA from Vancouver, and it was a stop off in Reno. I think it was Reno. And the girl that I was sitting beside in the airplane, she was so excited to go to Reno to get gamble. And it was weird. Like, we got off the plane, and of course they have all the slot machines and all the gambling machines and shit right in the airports. And she just plunked herself down, and away she went, and just poured her money into this silly video game, you know, gambling. And I looked at this and I go, geez, you know, I would, the odds are so staggeringly stacked against you. I looked at this, and ever since, I've never had any interest to go gambling, or, you know, they even have some casinos here locally in Vancouver, and I go to them, and it's sort of like, yeah, you know, I suppose I could play this, but you know, it's way more fun to play the market.
You know, it's an interesting point you bring up, because I'm also the same way. I never really liked, ever since I got into trading, I just look at casinos like, I could play the market. That's more interesting. I wonder what percentage of traders don't actually gamble in casinos. I think that'd be an interesting statistic to get.
Yeah, and really, you know, you have to be careful there. Because, ironically enough, and I don't even think you even realize this, dude. You are, and I tried to tell this to those Macro Voices guys when we were there. I think you are way better trader than even 90% of quote unquote traders out there in the world. A lot of sort of trader dudes, they just sort of like, okay, what's the hot stock today? What am I supposed to buy? Kind of thing. And so those kind of people, they love going to Vegas because they haven't really learned how to actually make money from trading. The people that actually learn how to make money from trading and how to play the statistical game and all the funny tools and stuff that we use, those are the type of people that Vegas is absolutely no interest to them whatsoever.
Huh,
so
interesting.
You know, like I was telling you earlier about the guy who buys houses every deal that he does, right?
Yeah.
He does deals, you know, goes to a company, they want to raise $1 million to punch some holes in the ground. So he goes and finds investors for them, blah, 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 blah. And of course, he gets paid ridiculous amounts of money for doing the service. But he's not really, he doesn't, those, remember in the Macro Voices guys, they were like, oh boy, here comes your squiggly lines and all that shit, right? You know, there's a lot of people that are in the market that don't understand the technical analysis that we do, right? And that just, it looks like it's just reading tea leaves. So it would be interesting to see like the actual population of quote unquote profitable traders out there. And who's actually actually understands this from a statistical basis and how trading, we want 66% accuracy and all that kind of stuff, right? So sorry, total side rant there, wasting time. Sorry, everybody. I'll shut up now.
No, I think it's great to kind of get insight into what it's like to actually be a trader and understand the whole system. And yeah, I mean, that's the thing. A lot of people don't believe in technical analysis, and I think those people are missing out on a big sector of the pie, a big piece of the pie. I mean, sure, I think TA, you could just do that and make money, but I think when you marry TA with fundamental analysis, what's going on in the market, you can get almost pinpoint accuracy with your entries and exits. And when everything comes together, it's, like Brian teaches, it's like seeing the Matrix. It's quite the feeling to experience, and it's really exuberating. Did I just make up a word? Exhilarating? It's exuberating. There you go. I made up a word. I like that one. Anyway, I saw this GC1 here, and interestingly, I don't know why this is closed and why this was last updated yesterday. Is there a reason why the gold market on the COMEX is closed on Friday? Because gold's up today. Gold's at like 1298 and change, and this thing's still showing that the COMEX one is down. So I don't know what the hell that means. Because if we bring up a gold chart, gold's 1298 on the spot price.
I'm blabbing away here, but I didn't realize I was on mute. Sorry about that.
I figured you were.
Did you notice your little ticker up above though shows gold up like $12 or something like that, right?
Right, but why is the COMEX closed?
Well, that might be the February contract, or where is it? We're in the middle of March now, eh? So the front month that they're quoting there might actually be like a funny, inter.
Yeah, what are they?
Yeah, I think that's like that to me sounds like an error on that website.
Okay.
Versus the market actually being closed. I think we were looking at the gold price here. I don't know what contract it is here. I think that's probably just a bug on their site. The March contract might have been delivered or something along those lines. It would be interesting to see what it is that they're actually quoting there.
Yeah, I mean, whatever it is, it caught my eye just because I'm wondering if the reason why we're seeing these things catch a bid has anything to do with that. But really, I think it's just a function of the dollar rallied really hard yesterday. And this thing seems to be coming back down to retest its breakout. Remember, the dollar's rallying in the face of this ECB news that they're going to continue to inject the banks with as much money as they want. Because they had to pay back loans and the banks couldn't afford to do it. So they were going to default on their debts. So the ECB was just like, hey, we're going to give you more money to pay us back, but you don't have to do it for 2 years. So that's what they're calling the LTROs or something. And the euro took a pretty big dump yesterday. I mean, this thing broke key support at 1.121. And yesterday we closed at 1.117. That's a really key closing. And then if you zoom out on this chart, I mean, this thing looks like a train wreck. This looks really disastrous here. I think we could be going sub 110, probably into the summertime. And I mean, look, we came off the lows at 1.03 back in 2017. We could very well end up back down there if things keep going crappy for Europe. So that, I think, is what's going on. The euro's retesting its breakdown. The dollar's retesting its breakout. I don't think that there's a change in these trends. I think euro down, gold up is very much on, or sorry, euro down, dollar up is very much sort of the play here. And it looks like the dollar's probably going to retest or at least try to break out to the 100 level if it can. And remember, this ABCD that we had up here pointed to about just shy of 100 or almost spot on the nose. So maybe that still needs to complete. And if we zoom in and get rid of all this noise, that looks like a realistic target that's still on the table. We still need to break out from that 97.69 high, but I think that's on the table after we get out of this sort of speed bump, if you will, for the Ides of March. Then we'll see the dollar continue its upward.
Last night I went to bed early because I wasn't feeling well, and I got woken up by alarms that went off because I had some set on gold and silver to give me an idea of whether people seem to be running a little scared. And sure enough, they both fired off like right before the London session.
Yeah, I'm thinking that gold and silver rally is just kind of a knee-jerk reaction to what's going on in China and the fact that gold sold off so hard. Evidently, the key level for gold on the CTAs was 1304, and a break below that would trigger a sharp sell. And that's exactly what happened on this candle here on March 1st. We broke below 1304, and then 1, 2, 3, 4, 5 days later, we're still selling off until today. I think this is just a normal counter trend rally. I'm not so sure that this is still, that we're transitioning into a risk-on environment permanently or for the next 6 months. I think this is just a temporary, like, uh-oh, what's going on in the market, kind of tremor talk. And that gold's just kind of got a little bit more to run just on the upside before it probably retests these bottoms. And the question is, does it want to go back down and hit this sort of 50% level at 1250 that a lot of people are talking about? We'll have to wait and see. But, we rallied just shy of 38.2. So I thought that was interesting too. These things aren't respecting their fib levels, or people are front running them because they know everyone else is watching them.
Well, I kind of like, I think Ray here will basically tell us what the direction is. If it can recapture those candle body closing levels right off that 38.2, then, maybe we see rally back up into reload zones, that kind of stuff. But on first blush, I would expect that we should get some rejection off of 13 EMA and the 38.2 and that sort of level CTA level that you were talking about there a moment ago.
Yeah.
If anything, a little dangerous. If anything, what I'd like to see is us, fail at the 38.2 of just this recent range, come down, make a new low, but momentum not make a new low, and then maybe that starts painting divergence, and we can start thinking back up again on gold. But this is probably going to take a little time to develop.
Yeah, I agree. All right, lots of market talk. We did almost a full hour on that, and it's a good thing crypto is sideways, because I don't think there's much to go over other than some news on crypto. I'll just jump into news here to get this out of the way. We've got a couple of interesting things. There's a UN panel that published their results with the Nikkei Asian Review newspaper, and they report that North Korea has around $600 million in fiat and cryptocurrencies, and they've amassed this money simply by conducting hacking attacks. And they're implicated, or at least accused, of stealing crypto and fiat from various banks, and specifically crypto from several Asian exchanges. There's some specifics as to maybe they were involved in this NEM hack by their program called Lazarus, and they stole about $532 million there. So North Korea is kind of amassing a bunch of crypto here, and they're conducting business outside of the traditional fiat banking systems using cryptocurrency. I was reading that they put a bunch of military hardware and weapons up on the internet for sale using crypto, and they transacted using it. So there were weapons exchanged using cryptocurrency. And I'm thinking, oh no, this is like the perfect excuse for governments to come in and just be like, okay, we let this crypto experiment run. It was really fun. And now we've got, hostile regimes using it to operate outside of the banking system, so we can't keep them from exchanging weapons. We need to come in now and do something. So I'm a little worried about that. Maybe like a small part of me is worried about that. But, this has happened before with sort of Iran and Venezuela, where the US is like, if you're caught transacting with any of these Bitcoin addresses, you're in deep doo-doo. So I don't know if that's the only thing they're capable of doing right now, which it seems like they are, but keep an eye on this. And if North Korea starts doing crazy shit like buying nuclear material with cryptocurrency, then you can bet your ass that governments are going to come in and control this as quickly as they can, especially since Mr. Trump couldn't seal a deal with the North Korean guy. And then evidently, like the day after this guy goes back on his train to Vietnam, there is a 2.8 on the Richter scale earthquake near one of the testing facilities. So the idea is maybe they're testing weapons again, and they hadn't done that in a long time. But there's a counter argument to that, that they've simply disrupted the ground around those areas, and it was just a normal tremor from the lasting effects of testing those weapons. But no definitive reports have come out as to which one it is. But this is a little worrisome, and definitely something to be aware of, that North Korea is hacking exchanges and stealing money so that they can do what they need to do. All right, so some good news here is that we had Colorado come out and say that, hey, if you want to do business and you want to start up an ICO or you want to transact in cryptocurrencies, we're not going to consider these things securities in your most traditional sense under the Article 51 that they've so long been a part of. And that Colorado wants to become a hub for companies and entrepreneurs to bring, sort of these novel tokens to the world or to the country or even the state, and that they're happy to be a little bit more hands-off than the rest of the nation is. So I thought that was really good news, and maybe we'll see some more innovation coming out from Colorado as far as that stuff is concerned. And then a little bit of altcoin news for you. If you bought ENJ, oh man, do I not have, here it is, crypto. So I got this source from Crypto Potato. I don't know how credible they are, but nonetheless, they've got this Engine coin. I probably mispronounced that, but this is something that it's called ENJ, and they partnered with Samsung.
I just got a double off on that. Actually,
There you
go. The chart on the screen here. This, and actually, once you're done this is a really interesting story unto itself. So I wouldn't mind talking to the community a little bit about this. But continue with your story. And actually, this is, or should be, a really good sort of juxtaposition with how traders look at the market, and then fundamental events, and how fundamentals drive price. So continue, please.
So this coin, they partnered with Samsung, and that's because they want this currency to be supported by the new phone that's coming out, the Galaxy S10. It's their latest flagship smartphone, and Samsung came out and they want to build cryptocurrency wallets directly into the hardware of these phones. And I mean, I don't really know why they've selected this coin specifically, but ENJ is a Singapore-based company who's behind this, and they evidently have a pretty decent market cap of $127 billion. It's really nothing to laugh at. I wonder where they're ranked on CoinMarketCap. Let's take a look at that.
Probably gone up quite a bit just over the past week or two.
Yeah, for sure. Let's see. So this thing ranks 43 on the list right now, so it's getting up there. But that's cool, right? So there hasn't been a smartphone that's come out and said, hey, we want to support cryptocurrencies. Apple's like, nah, fuck you guys. We've got our Apple Pay, we got our NFC chips, we don't need any of that garbage. And Samsung's like, well, we're an Asian-based company, we've got a lot of Asian customers, they really like crypto, maybe we should integrate it. Why not? Like, what do we have to lose? And clearly there's definitely some adoption here. And look at that chart. I mean, that thing's really taken off.
So maybe I'll just take a moment, because I think this is such a great analogy of what we do at TRI. I don't know whether my screen's on YouTube there or not. But, I actually originally bought this right through all of the sort of nutso euphoria of the early 2018 market. And I don't know, I think actually this is just about the time that actually you came to the site. So, this should be a really, really good analogy of how, people in crypto are so obsessed with the short term that they often can't see the big picture. And December 2017, okay, so you came to us right in through the nonsense. I do remember that, and nobody knew whether the top was in the market or not. So, the first quarter of 2018, I was still buying and working, bids. And this was a good example of just a simple mountain man bid. The traders got to trade. You see how I said these M's, and they're just sort of like, okay, that's it, walk away. This is classic sort of nanny nibbling what I did here. And so as a result, it was just like, you know what? I'll throw a little piece of my portfolio at this thing and just see what they do. You know, traders got to trade. They start getting interested in these W's down here. But, you know, I often see this where if you look back over time, and of course, here we are way up here now, you often see that, gee whiz, the ultimate W bottom happens to come in right through reload zones. You know, the slick, you know, TRI traders hunting things like Leon James setups and stuff like that, hunting W's and stuff, you know, they got the great signals here, but I'd sort of forgotten about this. I probably should have averaged down and done another nibble here, which would have brought my average cost basically right in to the actual W level. But even with my crappy fill, if I just work my open orders at double my purchase price and just be patient, I mean, I doubled my money in less than a year. I mean, that's the irony of all this. This actually happened in less than a year. So I don't know, Colleen, what do you think in your community? If people knew that they could double their money in less than a year, would that be an attractive idea? I mean, the irony of it all is, geez, I mean, you'd have to be an idiot not to want these kind of returns on an annual basis. And yet in crypto, we get so wrapped up in the very minute short term. There's just no patience or discipline in this space. And this is an excellent testament just to be patient and just to be disciplined. And the irony of it all is that you can see the coin did have a really nice rally and never got to my double level, but I didn't freak out. My trading plan is like I'm buying into names and I just simply want to work orders to sell half the position and generate a free trade should the asset double. And boom, I got my fill. You know, and I even tweeted out, I said, and you all should know perfectly well exactly where I'm going to be selling some more. If the market wants to go up there, I'll be more than happy to spoon feed the market more coins. And, you know, I would strongly suggest that all of you take this image and just simply put it into your database. And, you know, and I mentioned it earlier, but what are we all supposed to be having in front of us here while you're sitting listening to Brian and Thomas and all of our crew ranting away here? Where the hell that damn I've lost the lounge chat room now. I don't know what oh, here it is. You know, so I'll post it in here. Should I guess be over here. I'll post it in here, but gee whiz, guys, this is literally, I could teach a whole course just on this one chart. I mean, it's just so compelling. And this is what I really need to try and get across to the public is, you know, I mean, I don't know where the hell this damn thing's going to go, but all you need is just a few of these to make up. You might have like a bunch of nanny nibbles that you bought that go off the board. But all it takes is just, you know, just a few of these to make a monstrous difference in percentage returns. And all you got to do is just be patient and disciplined and just, you know, follow your plan. So really, really great story there. And everything that I'm really trying to teach you. Colleen, can you see the W down here? Like down, up, down, breakout? Do you think you could actually build a plan where we could just simply wait for green boxes, wait for W's to come in? My hunch is if we pulled up all indicators and stuff, we'd probably see divergences and, you know, OBV running up and all that kind of stuff. But the long and short of it here is, and Reza, maybe you too. Right? I'll stop picking on Colleen and I'll start picking on you. Can you see the W here? I mean, you know, the irony of it all, Reza, is that Reza worked for a job that's really hard to get in a sort of institutional research firm. And I would be willing to bet dollars to donuts that none of those managers there, because he was telling us some of the craziest fucking stories that they do there, I bet you they don't even understand this shit. And yet this is the shit that's going to make you rich, right? This is the shit that's going to get you out of that sort of rat race thinking and get you to, you know, actually be able to start controlling your own lives. and driving your own bus as opposed to fucking going and working for some clown that's doing blow on his desk. Anyway, rant is done. All right. We're well past the top of the hour. What do you think, sir? Have you sort of said your piece for the day?
I mean, we didn't look at Bitcoin and Ethereum, but they don't seem to be doing anything. They're just kind of stuck.
Yeah. Big hurry up and do nothing. And if anything, you know, we used to say in the futures markets, you really, I don't know whether I'm showing the right screen or not, but you really, we're in that slow drip kind of market state here. Drip, make new high, make new high, make new high kind of idea. And if anything, you're probably best not to fight this because it's a slow drip up. And then there'll be some sort of insane blow off top. And that's probably when, you know, the move is done. So yeah, I kind of agree with you. It's very, not really crisp levels coming in here on the big boys. And my hunch is if these little ones just keep popping, and this is sort of the tweets that I've been putting out, is, you know, at some point, Bitcoin is going to be like, hey, I'm getting jealous here. And then it's going to have its pop. And then we'll know that the move is done. So, but I don't know. I apologize for interrupting. Tell us a little bit about what you're seeing in the market right now.
I think that something's going on here with Litecoin on Finex with shorts coming, seem to be perking up here. And got a nice W coming in on the line chart. There's a lot of shorts popping up at these levels. I think that's because we just hit harmonic objectives and, you know, we're kind of at 50% levels. It would make sense that people are taking profits in that area, just kind of like these are the old highs. Is this a cup? I don't know. I think it's really close. Could this handle, you know, I think it's up in the air. I don't think this is a textbook cup and handle, but the fact that these shorts are starting to pile up here has me a little concerned for the rest of the market because it seems like Litecoin has been leading these markets higher, and you don't really see the
shorts just got hammered though recently though when they loaded up there, eh?
Yeah, even, you know, like a month ago when the shorts were getting squeezed, they got crushed. So, I mean, I can't make heads or tails of what's going on here. I know that, you know, Christian and Alex had some cool stuff going on with this information. I don't know if you guys had a chance to link up, but, you know, Christian, if you're listening to this now, you got to reach out to Alex. He's got some cool stuff going on with this, you know, with this, and maybe you two together could come up with something really neat. But nonetheless, I don't see anything here on Bitcoin or Ethereum that's, you know, popping out even on a daily chart, like higher time frames, no reasons for anything catastrophic or, you know, and if you look at the weekly chart, you know, we're still kind of like bullish divergence that's confirmed, but I really want to see the structure here. I want to see this thing break above this level. I want to see us break above, just call it $4,000 and close above that for the week, and then I think it's game on. But what has me concerned is that these moving averages have a long way to catch up to each other. And I'm afraid that this 30 here on my yellow line, this 30-period moving average, might need a couple of weeks to just come back down, sandwich the 13 a little more, and then we can kind of get that crossover. So, I mean, if you want to take, you know, your long-term studies and overlay them on this, I think we've got a couple months left before we can really enjoy a nice solid rally. But
Drop Vegas.
Yeah, that seems to be it.
It's ironic how I had sort of coined that term there about a month or two ago. And this market is totally chop Vegas. It's, you know, the Bitcoin traders, like I just trade Bitcoin. I would imagine they are having a tough time right now. So, yeah.
Crypto Twitter.
Looking at that price chart, we see the bottom there. We see the V. You know, I don't know where the hell this damn thing rallies up to. I wouldn't be surprised. I remember Ethereum did this a few years ago. Basically a V bottom right into the end of the year, rallied up to its 38.2, and then just sort of went sideways for a couple months. So, you know, maybe the shorts are going to get validated here. I don't know whether that's enough of a reason for us to justify taking a trade yet on this thing. But you see that sort of price action from, I guess, late August right through to November. It almost feels like we got to go through one of those kind of periods where it's just back and forth, back and forth, back and forth. And everybody's saying, okay, this is the dump. This is it. This is it. And then it doesn't, and it turns around and goes back up, right? Chop Vegas. If anything, guys, this is an awesome opportunity to make money in the altcoins, right? And probably the final sort of thought I'll have for today is, and I think I mentioned this to you guys yesterday, but there was one of the Twitter OG or Twitter crypto OG guys who posted a list of names that he thought he liked, and I just pulled up the charts, and you can see on a lot of these names I actually have a bunch of bids working, I'm just going to be patient. The only one that I think that I could technically trade on a breakout is this HXRO, just because it doesn't have that much history. And if these guys want to pump this thing, they've got the green light if they break it out through the top here. I see a lot of these names, they're actually gaps right at 78.6s. So I got a feeling, like this is like a coin picker's market. So get out there and have some fun, right? The tailwinds, I think for the time being, I don't see necessarily down. And kind of like what Julian said yesterday, short and sweet, daily chart's still pointing up on Bitcoin. This is that drip, 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 drip kind of market. And if anything, probably the end of this, there has to be some sort of blow off top. The public gets all excited. Oh, gotta buy it, gotta buy it, gotta buy it. And of course, they're coming in and FOMOing the top of the market. Okay, so I think I've said my piece for the day. I'll take a screenshot of this and throw it in the lounge if you want some names to chew on. This isn't a bad list of 4 or 5 names. If you don't have an FA list working right now of ideas that you might be interested in participating in, at least that's a starting point. Obviously do your due diligence. We're rational investors, so that means we want half-decent fundamental ideas coupled with half-decent technical levels. But I really think that this is a fun market. We're heading into the weekend, so, we don't want to chase. Don't get sucked into FOMOing. Work your bids. And if we're lucky, maybe we can get like a little bit of a panic dump here on some, crypto. Maybe it's a pop in Bitcoin that brings these prices back down to these buy levels. So,
hey, Brian, did you hear about this Canadian tax inquiry for crypto traders?
Yeah, I think what I saw was that, and this is a little bit of a sad commentary on crypto itself. There is a big portion of this space that believes wholeheartedly that they're not going to pay taxes and they're going to be able to totally disconnect from the system. And so, CRA, in Canada, they're just as stringent, if not more, than the IRS down in the States. And they like to keep a very tight control of the money system. I thought it was interesting. Their response was, the typical politically correct, well, everybody should pay their fair share, that kind of stuff, and nobody's above the law, all those kind of rhetoric, right? And actually, I went through the survey, and if I understand correctly, they're really concerned about these anonymous coins and buying crypto person to person. That was a big sort of focus of the survey. Did you buy like Bitcoins just from a private vendor? And then they're also really concerned about, I think there was 2 different services that you can like wash your crypto holdings so it becomes anonymous and you can't really tell what your cost basis is and where the coins actually go to. And I think that's really what they want to crack down on. I was curious to go through the survey and actually see what it is they're looking for. And people that, keep their coins on the exchange, or just even your private keys, they even say right in there, do not include your private key information on this survey. They just really want to get a feel for, is anybody blatantly taking advantage of the system? And then, of course, too, if they require that you fill out the survey and you answer one way, but then they can prove something counter, then you're screwed, right? Yeah, they've got you. So this is a very easy way for them to just get a nice broad sort of measure of what people are doing in the space. I was surprised. I was fully expecting that I would get this survey and audit and stuff, but I haven't seen anything. And the tax man is perfectly happy with TRI because we pay a lot of taxes. And the irony of it all is our accountant here in Canada goes, actually, the CRA is most concerned with the companies that report losses. So then that way they get a big tax deduction. And she was like, you guys are paying lots of taxes. CRA is not really that interested in you, which I thought was kind of amusing. So go figure. Now I've said that, knock on wood, right? But the bottom line here is, yeah, you got to pay your taxes. There's just no two ways around it. And ironically enough, it's the people that are in ICOs. That was another really big thing in their survey, was did you participate in ICOs and that kind of stuff. And really who they're going after is they're going after sort of like the developers of these coins that have made, millions of dollars. And they're just simply not going to pay their taxes. And that's, I think, who the CRA really wants to focus in on. If you just report your capital gains on your returns, then I don't think you really have a problem. So anyway, that's my short answer with regard to that question. Yes, I did see that. And the simple response I have is, yeah, you got to pay capital gains on this. If you reported a capital gain, you got to pay it. Mm-hmm. And if you don't, and if you start messing around with the system and they ask you to fill out these surveys and you lie to them, then you're basically setting yourself up for disaster. So.
Yes, good. Really good information. Pay your fucking taxes. All right. The other last thing before we go is that Fidelity launched their custodial services for Bitcoin. So if you are on Fidelity and you want to trade crypto, they now have that available for you. And I don't have an account with Fidelity, and I didn't read into this, or at least find it. I don't know if you control your private keys or not. That'd be really interesting. Because, I mean, as a custodial service, I don't give two shits about what you're offering. If you're not giving me the private keys to the crypto that I supposedly bought, it ain't my crypto. And just remember, if you don't control the private keys, it's not yours. And, it's really funny that these banks are launching these services. And it's a little weird for them to get involved in something that was sort of created to bypass this, ancient system that's held us back for so long. So just keep that in mind if you're going to be using those services. Why are you using Bitcoin in the first place? Do you really want to be supporting these guys? Yada, yada, yada. Just, back of the head, back of the mind kind of stuff. And with that, I will leave my mouth closed and I am done ranting. And this has been a great show. And I will see you.
I got a class I have to teach in 25 minutes. So I'm
sorry,
out of here. All right, guys. Have yourselves a great day. Thank you very much, Thomas. I thought we had a very in-depth discussion, talking lots about the stock market, of course. But I think we touched a little bit on crypto. We've also given you some ideas for you to chew on there. So, have yourselves a great day, everybody. All the best. And Alex, what do you think? Did these people get some value today?
Yep.
All right. So we got the mayor's seal of approval. Have yourselves a great day, everybody. I'll see everybody in class here in about a half an hour. All the best and bye for now.